I changed my whole screen layout now.
Yep. We got you up.
Okay. So you guys can see it. So I can't see what you guys can see actually.
Yeah, we see your charts and then your watch list on the right hand side.
How do I see? Okay, so I guess I just have to assume that you guys are just seeing it right. So what do you just see my charts?
We could see what is wrapped in green on your screen. There's a little green border around the outside.
Got it. Okay. Because I have a huge screen up. I just clicked to share the one page. So I just want to make sure that's all I was sharing. So right now, all you guys see is Trading View, S&P 500, 5-minute chart.
Correct.
Got
That's it. Yep.
So what about if people ask questions and stuff? Will there be a chat that I could see that to follow along, or are you guys just going to read them to me?
We can read them to you if that makes it easier for you.
Yeah, it doesn't matter. I just wanted to know.
You bet.
Okay.
Yeah, you can click. There's a chat button on the.
I see it
on your screen. Yeah,
got it now. I got plenty of room for it. Okay. Oh yeah, somebody put out that tweet that I put out. Is that what I see right now?
Or that Chris. Yeah, Chris put that out.
Got it. Okay, cool. So we're on the same page. I wanted to have it up. All right. So today you guys are talking about trading short. And one of the things that Rob and I were talking about is showing everyone how I get my support and resistance levels. And if you've watched the show or if you've heard me talk in the past, I created my own indicator. Gosh, it's going to be about 17 or 18 years ago now. And my indicator is what gives me support and resistance levels. And what I look at is I look at 20 period, 3 standard deviation Bollinger Bands. I'm actually going to pull up a daily first to start there. I think that's even better. I'm actually going to get rid of the watch list for now and just make it bigger. Okay. Because I think this will make it the easiest to see. So what I look for in 20 period, 3 standard deviation Bollinger Bands is I look at the peaks of the Bollinger Bands. Then I take a Fibonacci tool. I don't manually do this anymore because my first of all, my indicator is for free. It's on TradingView. You can go to my page and download it. And what I do is I took a Fibonacci retracement from the bottom peak or the top peak to the bottom peak. Once they're formed, and it'll go 70%, 50%, 30%. Obviously the top and bottom peaks they're already there, but those are just 0 and 100% when you look at a fib. And what I'm really looking for and how I created this and why I created this is I think is important is the times where I struggled the most were times I saw things like this. So you see the market would just keep running up. And we talked about being short today, and you just don't know when or where you could be short or when you should be looking to cover longs. So in this particular instance, the market just breaks out from a new high right here and keeps grinding higher. That instance to me, during this whole time, I probably have framed out, let's just go to probably to right here. I was probably getting chopped up or, losing money most of the time. So I looked at what is my weakness? My weakness is not understanding when a trend is going to stop, what would make it stop. I still don't know exactly, right? No one actually does.
Nobody really does, yeah.
But how do I stop myself intraday from stepping in front of a trend that's breaking out to new highs? Because let's face it, when you're trading the indices, you're trading new all-time highs quite frequently, especially over the last several years. So we don't know what resistance is until resistance comes into play. So you're just in this space of not knowing when the market's going to stop. So what I looked at was, I looked at the peaks of the Bollinger Bands on the daily, and I would say, okay, when we started to get near them, I noticed that we would have some retracements. And you can go back and look, and it's not always the case, but this was something I just saw and would say, hey, when we break out against highs, this was what I considered unfinished business. So when the market would eventually get to these levels, I would consider, okay, this is an area I could step in and potentially start to get short. I would watch it. But if the Bollinger Band was getting above the previous Bollinger Band peak, like it was right here, let's just draw this scenario again here. Like this is another area where I would look at and say, okay, so it's starting to get above that old Bollinger Band peak, but the top Bollinger Band is making a higher high than the previous Bollinger Band with the market. So I'd always say to myself, so you still can't be short. The only times that I could be short when I'm going against trend was when we were in a scenario like this. So what I highlighted here is the Bollinger Bands start to come back down. The top Bollinger Band was down. The bottom Bollinger Band is starting to come back up. And then automatically my tool would draw the 70, 30, 50%. And I would use those as resistance. I would use yellow as my neutral and say, this is really my gauge of trend. So I would say to myself, that's why I leave it yellow. I would say if it continues to hold above this, the trend is probably still up. So it's another way to say to myself, okay, this would probably be a good area to, if support, look to see how it trades around there. Blue would be like, okay, if we really broke through yellow, what would be an area to look at for support? And that would be the 70% retracement from the Bollinger Bands, not from the market. And that's what I used as my general guideline as to, somebody's asking if I have it for a NinjaTrader, and yes, I do. So I could email it to you, or actually it should be on my website. I'll double check all that, but
That'd be great.
we're
We're a certified partner with Ninja. So
okay, yeah. So I have it for Ninja,
awesome.
TradeStation, and TradingView.
Perfect.
So with this is just a general gauge of trend. So the dailies, I'm not trading too much of them. What I will look at is a blue and or a yellow on a reversion back, a mean reversion trade back, and I will look for those as potential swing positions. But majority of the time when I'm trading the S&P, it's not really the longer term play. I'm trading that more to the midterm, more shorter term. And then what I'll do is I'll just take it down to a shorter term level, like a 60-minute or a 30-minute. If you look at the top of my chart, you'll see I have 1 hour, 30-minute, 5 minutes saved. Those are really the only time frames that I'll look at. So this is what gauges the environment and support and resistance for me on a bigger picture level. So let's just go to today. Let me just make this bigger and bigger. I'm actually gonna have to talk to my programmer, or like my programmer. It was a guy, I put a tweet out and to ask somebody to help me put my indicator for free on TradingView, and somebody did this for free. So
that was nice.
Yeah, very nice
That's
guy
cool.
to do that.
Yeah, yeah.
I want to talk to him about making the line solid anyway. So
Yeah.
when I separate it like this, it doesn't look like this. But anyway, so for example, now let's talk about the current environment and what I would say or see coming into today. It's actually the perfect scenario as to kind of what I talked about so far and what I look at. So we look at the old peaks right here. So let me just box off where we are right now. And I think that this is exactly what I'll be looking at. Okay, so let me make this like this. Okay. So what I'm looking at here is, actually, I'll take that up too, just a dot. So the Bollinger Band makes peaks, and then it comes back down. You can see here, it boxed in with my red top resistance, blue bottom resistance is the peaks. Now, I don't love this look exactly because when I look at it, the peak isn't really clean on the bottom. It's more clean on the top that's a peak. On the bottom, that was more of just like a sideways Bollinger Band that came up. But nonetheless, that's something that I'll still look at and say we're boxed in. Okay, the market once goes down to yellow. It held yellow initially. It blipped down to blue, comes back up, holds above yellow. I look at that and say the trend is intact. And what I like to look at, go back and look at each one of these going back all the way to May. That's all I have up here on the daily. I'm sure if I went back farther, it'd look, we probably have very few, if any, tests of the bottom peak. And that's just a representative of a very, very strong trend. When you hold yellows along the way and blips down to blue, minimum amounts of time at blue, and then regains yellow quickly, and then continues to go up and tests the top Bollinger Band peaks, which is what I see here pretty religiously in S&P.
And then again, those yellow, blue, red are indicate of your Fibonacci's, right? 30, 50, and 70.
Yeah, I mean,
Levels.
and they're not really fib levels in a sense, right? I mean, I know they're not.
It's based off the
382s.
Bollinger. Yeah.
I just use the 30, 50, and 70 because when I was testing, I should clarify why I choose those areas because I think it's important. As I always say, I'm not here to tell you what to think. I'm here to tell you how I think. So why did I come to those levels? Well, what happened was after putting up a million fibs, a 382, all these different ones, I actually reached out to somebody and said, look, can you just test between 20 and like 35% and show me if on these daily bar closes, or how often, what was the most consistent that it stayed below to where it would go and test yellow to actually be resistance. And the 30 point something percent level, basically 30% level, came out to be the best. So that is why there's actually some math behind that. That was about me visually seeing it and then also supporting it with somebody telling me that yes, 30% is a good indicator of what? That we're going to revert back to yellow. So really that's all that red tells me. And let me bring it to the current day one to really focus in on that. So if you see right here, okay, here's where we are right now, right? We took out the previous Bollinger Band peak high, right? We stayed up there for several days. Look, it just kept hitting it and couldn't get it. Remember how I said I kind of call that unfinished business? Because if you look at a Bollinger Band, when a Bollinger Band is going up with the market, it's going up to a point where the market just keeps pushing and punching at that ceiling. And until that Bollinger Band starts to come back in, at that time, the Bollinger Band is gauging how far a market can go. So John Bollinger, he'll talk a lot about actually his recent tweet about what he looked at for a target for Bitcoin was the top Bollinger Band, and how he uses a 2 standard deviation, which is obviously very reachable, especially for crypto. So I expanded it to a 3 standard deviation Bollinger Band because I'm not using it as a target to hit it. I'm looking at it as to where it would revert back in and use that peak as a target. So it's similar in nature in a sense, but it's different. So because I wanted to be able to see where we would go, what I would consider unfinished business. So that's why I look at a 3 standard deviation move, peak high as unfinished business. So then we get to here to today, and it says, okay, look at, we hit the new red, which came, or pink, it calls it 45.26 was my new red resistance. And once I see it, the 10-day moving average there, and it starts to fail, it tells me that a test of yellow is probably very likely, which is 44.74. And if it fails to hold there, then it tells me that a test of 44.22 is likely. All this does on the daily, like I said, I'm not really trading those levels too much. All they are giving me is a guideline of trend. It's confidence. Where am I at? So today, or the last several days, I would not be a buyer until, like I've said, a blip down to blue. If I were to just use this daily as a signal, 44.22 ish area would be an area I would step in to look at for a potential long. I always say, where's my stop? Know where my stop is before I'm getting in. What I'll do is I'll gauge a lot of times, what's the distance to risk off R1, my first resistance level, which would be 72 or 74.25. So you're looking at roughly, let's call it 50 points. I could take a stop anywhere between 25 to 50 points if I wanted to be able to get a good return on the first target. That's what I would be looking at if I was looking at it on a daily perspective. So to me, how I would identify that trend would no longer, or a daily close below light blue. If we close below blue on a daily, then I would say, you know what, we might blip down and test these areas. And then at that point, I wouldn't use those as support to buy. I would wait to see, and it's actually probably going to be hard to see if we even have an example of what that would look like, because S&P has been so strong. So let's see. Let me see if there even is one. How far I'd have to. There it is right there. Okay, so this is actually this is very similar to what, I'm not saying this is what's going to happen, but if you look at this right now, this is almost what I would say we're in. Grind up higher, test Bollinger Band peaks. These quick resistance levels come into play. They test yellow, light blue. They keep holding. And eventually this is what could happen. So this is why I don't buy the bottom Bollinger Band, is I wait for this area to happen. When we finally go down, and that would signify to me, look at 10-day moving average comes in right there too, perfectly. I remember this area actually very well. I mean, this is COVID. Once this started to hold, I was like, the low is probably in. And that's what I would look for in a situation now.
I think you had something similar on ETH as well. You would talk something similar on ETH when it did some very similar type of move that it gave you a lot of confidence to get long when you had those two or three things, including the MA, all lined up, or the simple moving average, the 10-day, all lined up together. And it's like, okay, here we go.
There it is right there.
Yep.
And I actually got quite a bit chopped up in this a little bit, because this, when it started to close below here, I struggled. But if you go back to ETH, let's keep going back. I've been trading ETH like this for, gosh, probably about 2 years now, maybe even longer than that, actually. Probably more like 3 or 4 years. But this was the area of the most recent one where I got long in here. I remember this vividly, and I started getting stopped out down here.
I can imagine.
This was the toughest. This was the only true real drawdown of any significance I've had in ETH in a while, because it's been in such a primary bull trend market. I took several hits in there.
Yeah.
But once again, I regained majority of that and more in here. And then as of late now, I stepped back in because we're holding yellow.
Yeah.
Now, this is one thing I'm actually going to work with on the code, because it's not showing it to these peaks, because the code is built to show that it didn't take out that peak. But the environment now is essentially, there should be lines drawn on here. That's actually something I'm working in to change the code. Actually glad to see that I could show you guys. It's like there should be lines drawn on these Bollinger Bands, but because they didn't take out the previous peak high, that it didn't draw it. But that will actually be the case in NinjaTrader and TradeStation. That code is updated. That is not the case in TradingView. But nonetheless, ETH is actually a good example of where I talked about this. And actually, if I took my fib and actually just manually did it, I wonder, let's see if I just did this. 50% actually is going to, so it comes in right here.
Yeah.
And I looked at it. I actually stepped in and bought them right around 33.50 anyway. So blue would come in at 30. Is that right on this? Let me see. No, it isn't. I don't have that updated on these fibs, but I bet you 70%. I wouldn't be surprised if 70% is right around 3,000. I would probably be pretty confident of that.
Yeah.
So it's just something that I would look at. ETH this is a tough look for me for ETH at the moment. I don't want to get too far off the topic, but to me, ETH is consolidating inside this bigger Bollinger Band in here. So you'll hear me talk about it this weekend on Develop Your Edge. Or actually it was this past weekend. This area to me, only a small entry, because, and now this is actually what's good about this one is it's a very defined stop. So where I started to buy in here at ETH now, if it fails to hold any of these lows, I'm out. Because then I feel like you could have a really decent pullback again. I'm just not convinced ETH is ready to explode from here again. I hope it does, because I've got a lot of reasons to, but I don't know. I'm not, in terms of my swing position, I'm not doing a ton with it here yet.
It's amazing that you're showing this, because you had a video in May of 2020 of explaining this setup. And I sent it over to our opening bell moderator, Jeff Brown, because Jeff uses fibs, and he was like, wow, look at this. So, and we reviewed it actually before session, and you and I did not talk about this, about you showing this specific setup. I just find it crazy that we showed this video, and I showed it to Jeff Brown here, that we're actually talking about it, and you brought this up, this exact setup. And you and I didn't plan this. Deli, no. You and I didn't plan to talk about this setup. So I
want to talk about this question that Kevin asked, because so Kevin, this is a great question. So let me go back to the daily. So Kevin's question is, so are you mostly trading against the trend as it goes up? No, like I said, this is it. I am mostly looking for opportunities when I see this type of look, as I said in the S&P, to use long setups on my other time frame. So right now, the S&P on the daily is really very difficult to trade, because I'm getting very little chances to test blues and even yellows. I mean, you're just buying blues and yellows. So if you look at the daily, you would say to yourself, well, this looks like the only setups he's getting is short. And that is the case if you were going to trade off of the daily, because when you look at this, you would say to yourself, it's how do I identify mean reversion? Remember when I said, Kevin, at the beginning, that what was my weakness? My weakness is stepping in front of a trend that's going higher. This tells me the only time that I can step in front of a trend is an intraday trader. So the other times I'm only looking at long intraday setups. Now you guys are saying short. I'm not day trading it right now, but I would be looking at shorts in this instance. But now that we're getting below yellow and near blue, I'd be flipping and looking at longs again, intraday. So this is just to give me my daily bias to get into. So let's go to the 5-minute chart to look more at how that would really be able to execute. So you look at a 5 minute. If I come into today and say, okay, I am looking at shorts, the first thing I look for is the Bollinger Band peak. Okay. And you can see we're all boxed in right here. So I highlight it. Okay. I look for the Bollinger Bands to go up. And once they start to revert back in and we can't get above 30%, that tells me we're going to test yellow and potentially blue. So what I would look at if I was going to trade earlier, I didn't do this. It would be short here, targets in there, targets in there. And then this blue would be my buy signal. So I wouldn't buy a stagnant blue. So this is one thing I should say. I would buy the blue after the Bollinger Band peaks come in. So this to me is a perfect example of what I would look for in a long. Perfect example, because several things, I might actually buy some there. What I look at is this is exactly what I want to see. Okay. Look at where the bottom blue is here on, let me just move it so you can see it. Okay. 44.21.75. So for me, intraday, 44.43 to 44.22 ish, we'll call it, that's my zone to be long. Why? Because go back to the daily. The daily level is 44.22 half. So now my intraday is confirming that I'm getting support on my 5 minute. So 44.43, let's go back to the daily again, right? Nothing there, but I look at it and say, so you want to buy at 43, and because the recent trend is down, I want to buy at and below my initial support. Why do I want to buy at and below? Now, if we would have touched blue on the daily and then went up and then I got that 5 minute buy, I'd be buying at and above because I would say the low has already been confirmed. I'm not sure the low is confirmed here yet. It may be, it may not be, but we're coming off of a new daily Bollinger Band coming down off the top, markets going down. Short term, the sellers have the short-term momentum. So I have to be careful in how I execute this. So my thought process is I want to buy at and below prices as close to this area as possible, because I have to have my stop below 22, because there could be a blip that gets us in down here. So for me on a swing position, now this is actually boxing it out for me, saying you could start buying at 44.43 down to 44.21. This is actually something I would use the micros for, because I would just start scaling in micros all the way down. And I'll go to my 30 minute to see what confirms, and look at 30 minute confirms 44.44, which is very similar to the 5 minute. So now I have multiple confirmations from a 5 and a 30. Let me go to my hourly, and my hourly comes in at 44.53 down to 44.17. This area for me in the 60 minute is where I would look at the most. So when you look at the 60 minute, this area is telling me from 44.50 to 44.20 ish. That's my buy zone. I want to be buying at and below these areas because it's coming up on multiple short-term timeframes. Because that to me is where, if the trend is going to continue to go higher in the short term, this is the area they should hold. So I think that's what I'd be looking at.
Anthony, I think you're answering one of the questions we had developed, and that is on your chart right there, where it pierces the 70%. Are you looking to buy when it starts back up and comes inside the 70%? Or are you just saying any place below 70% is a good place to get in?
So in this particular one, the 60 minute to me, when I look at it, it's too choppy. So I would be using 5 minute. So the minute I would see this right here, that's where I'd step in. And I would even go to, like, let's just say a 3 minute. This is where I would start to narrow my time frame down, because even though I'm not trading it on the shorter term here, I'm going in a shorter term for confirmation. So you see how it's trading. You like, look at the 3 minute, and you say to yourself, you've got the look that I saw here. So I would be buying below 44.50. This is the reason why in a bull market, where after we hold the light blue or above the 10-day, if I were to see this right here, where the hand is, I don't know how clear that is. You could see, I would be in a majority of the position right there. But in a daily scenario that we have now, where we're coming off of a red, we're below the 10-day, we're below yellow, I buy below the blue, because the short-term trend, even though the longer term, let's say the short-term, long-term trend, okay, is a little bit bearish, I buy below my initial support levels. So these initial support levels, I'm looking for them not to work that clean. Why? Because we're in a scenario where we're not sure the low is in. I always look at the market as the market only looks towards highs and making new highs or making lows. It only looks in those two dynamics, because in a market that we're in right now, no one is looking for the high. Everyone is looking to see if the low is in to potentially then look for a high. Unless I had strong confirmation that the low is in, then I would be stepping in on my shorter term more aggressively. But right now, this recent low to me is not very convincing, because when I go back to look at my daily, okay, let me just get rid of that boxed out area. That low is like, okay, yeah, maybe. I hate this Bollinger Band because it's flat. You know, what we could see in going forward here, you know, in my mind, it could all of a sudden, this market could start coming down like this and coming down in here. This bottom Bollinger Band could be going like this, and this top Bollinger Band could be going like that. Like that easily could be the case.
Sure.
Right? We've seen this so many times. So it's not convincing to me. If this top Bollinger Band were to do something like this, okay, and then this were to do like this,
Yep.
I would be more bullish here.
Mm-hmm.
Okay, but it's not. Right? So when you go back and look, you know, where would it be? So like right here, this is a good example to go back and look at. So right here, when you see this right here, okay, and this right here, okay, at this point in time, what's happening?
Yeah, it says the market bias is coming off.
So
Right?
when it blips down and holds and the bottom Bollinger Band's going up, it's saying that we're boxed in. Here, it's not saying that.
Mm-hmm.
Because the bottom Bollinger Band is not really moving. We could be just in a consolidation right now, and we could blip down to 44, you know, or 43, 44. That's not impossible. I mean, because that's what the Bollinger Bands are telling me. That's why I'm buying at and below support, because the closer I can get into my stop, that's why I also said I'd be using micros, the better, because I am able to now scale in and for a trade that, look at, we're still in a primary bull trend. I might be able to get some off with the micros, and all of a sudden it shows me that the look is cleaned up and I could step back in. But right now I don't see it. You know, that's just why I look at the daily first to tell me the environment. And then I could go to my shorter term to see what's it looking like. Does that clarify it?
Yeah, it really does. It really does. It just to paraphrase, make sure I've got it. This isn't really a buy signal per se, as you pierce it going down or going up on the 70% on your chart right there, but really just an area to be aware of that there may be opportunity below that 70%, below 44, 43, 75, there may be an opportunity to go long. Is that close to?
Yeah, it's pretty close. I mean, look at, there's no, in my mind, I look at it as, I just go back to, what is the daily telling me? The daily is telling me historically that blips down to the first light blue have been pretty good buys. But most of the time they've been good buys is when, and this is important, when the bottom Bollinger Band is pointing up. Okay? So
okay.
like, that's the one thing I don't see right here.
Yeah.
Okay. So like I said, this could be what happens. This could be what happens.
So it could point up in the next period or two. So how long do you hold on to that view? Is it good for a few periods, or?
So like right now, and let's bring it to present day, how exactly I would be doing it. And this is exactly how I would be doing it. So what I would first look at, so to me, the hourly, it tells me quite a bit, because the hourly is saying that 44.17, because we can't hold here, if we keep getting hourly closes below 44.53, and I look at the hourly closes as pretty important, because if they can't finish the end of the hours above there, that means we could just spend more time in here, right? So eventually this is the blip down to maybe test this. So in my mind, I look at, as I said to the daily is not confirmed with the low. The areas that I would be most excited about buying would be the bottom blues nearest the daily. So the daily is 44.22. So let me go and look at my dailies here. So hourly is 44.17, 30-minute comes in at 44.20, 5-minute comes in at 44.22. The more I look at it, I say to myself, I've got to be able to commit to buying in here because that could be where the blow off happens. Anything piercing this is why I said I'd use micros. Step in a little, step in a little, start to see consistent closes below these areas. I start peeling them off. Somebody said, where would my stop be? My stop has to be below 44.21, going back to why I'd have to use micros, because I'm not going to step in and put on a ton of risk up here, because all I want to do is start to get into feel and see how it sets up, because the daily could eventually do this. And if that happens, we'll have a spike back up to yellow, maybe even a 10-day moving average where I'd probably look to exit them. So in my mind, I'm anticipating kind of a blip lower at some point, but I don't know that it will happen. This is the S&P. If it was the NASDAQ, I mean, once again, I'm also looking at a market that is the strongest market that we have. So in like gold, I wouldn't even be stepping in with micros and buying it. I would almost be waiting for the blow off, because gold is such a rangy, choppy trade that it doesn't really lead me to want to step in anywhere except for the blow off areas. NASDAQ kind of similar as well. The S&P, it's a little different because it's been so strong that I may not get the opportunity to get in at that blow off level. Like it may not happen. And then there's probably a pretty decent chance that it doesn't. So if I'm an active trader, I'm saying to myself, in this scenario, I would look to step in with micros and spread it out. Now, how long would I hold it? I mean, you hold it until it doesn't work. The only price stop I would have is a piercing below that daily blue, and it would close below it, or I would watch the action that day. If all of a sudden we're in a scenario where I go to the hourly, okay, so let's look at this. Let's just say that this were to happen, right? Let me delete that. Let's just say that Bollinger Band goes like this, and we're down here, right? And the Bollinger Band is below this level. Well, then I wouldn't even be stepping in buying. See what I mean? Because what would I be looking for? It could just blow right through that, because the Bollinger Band's expanding on this time frame. So then I would go and look and say, we could be looking to do what? I would be looking for something like this again to happen, where for example, right here. I mean, right when we got into this area, I would look for a new light blue after I were to see this pierce it. Go back to this. And I would wait for this Bollinger Band to come back in, and then I would step back in the clean look, and maybe that would be at a daily level. So what would keep me away, or what would get me out, would be I would go to the next longest term chart I have, and this is what I would look for. If that Bollinger Band is taking out that bottom peak, and the S&P just happens to be in here and I'm long, let's just say at 44.30, I keep adding micros. All of a sudden that bottom Bollinger Band's at 43.90. I'm going, there's too much room. I have no way of controlling risk now. All of a sudden I could just see the thing melting down. I'll wait for it on that time frame to then, let me go back to my drawing tool. Like I said, come back in, do this, draw a new light blue, and then, hold above it and step in there. That's what I would look for.
And for traders too, that, we have some traders here that are newer. They're building a foundation, trying to understand, what is futures, almost so that's really our focus. So that what Deli is talking about now would be your next progression. After you build that foundation, you understand some risk management, you understand trend, you understand all that. And that's really what we want to do at FNL, is bring in people like Deli to help the traders that have a good foundation. They've been taught how to trade one way, and that's the only way they know how to trade. So we're trying to have people kind of think outside the box a little bit from what they've been taught, maybe at somewhere else. So, this type of setup is a setup that Deli's been using for how many years now?
17, I've been using 15? It. Yeah, it's about, I developed this I started developing the indicator in 2000, 2001. And I really kind of had it to where I liked the way it was around 02, 03.
So if you're a trader and you're going, I have no idea what these guys are talking about. I am like over my head right now. That's okay. That's okay. Because trust me, we're all over our head and trying to figure out what's going on at some point. But the reason why we have a group is so we can get together and we can discuss things, we can share, and we can collaborate. I think I couldn't imagine trying to trade on my own, like not being around other people and just sitting behind a screen and clicking buttons all day. I already do that with online poker, and I couldn't imagine trying to do this. So, thank you again, Billy, for coming in and like sharing this with our traders, man, because it makes a world of difference for traders who are like, well, what now? And none of us are gurus here. None of us.
So Rob, if it's okay not to understand, is it also okay to like salivate over what?
Of course,
yeah. What he's saying here.
Of course. I mean, that's our goal. We want you to salivate over stuff like this. Like, oh man, here we go. I got something to work on now.
This is awesome.
Yeah. The most important thing for me is always, what is the rhythm of the market? What is the tone of the market? Like right now, I just keep going back to the daily and the S&P. I mean, this is why I'm not super active at the current moment, even with ETH and everything. Mm-hmm. I like things to be smooth. And when trends, this is why I put that tweet out this morning and saying that you make money in moments. Right now, everything I'm doing is anticipation of getting a clearer look. So I have to, along this time, be really tight with risk. I don't care how big you can trade. I go to micros because sometimes I need to be in to feel it. How's it responding? Getting in and out of my positions. How is everything going? Keeps me in tune with the market. To all of a sudden the look is clear, and then I could step in. I used to do that all the time. I'm not doing that as much right now because unless the looks are really clear for me at this phase of my career, I'm really just not doing them. And now there are times where the markets are busy, and then we'll go through this transitions and where I'll step in. I look at 2020, I was pretty active throughout most of the year. But then when all of a sudden I start to see it to where it's just a runaway bull market, I just don't really do as much. We used to always say on the floor, when we get runaway bull markets, stay loaded in all of your portfolio, your stocks, that they're going to do far better than you are as a day trader. So that's what I've been really doing, is just believe me when I tell you, I want to sell everything. I've sold a lot of stuff over the last couple of weeks in my longer term stuff, because I just keep seeing, why would I do that? And I should, everything has to be for a reason. But when I look at everything that's happening, blowing out this top, this red one, once I saw that they were up in here last week, I actually sold some of my Apple. I had a couple of other stocks where I was like, you know what, I'm going to dump them because maybe there's eventually going to be some sort of a pullback. I mean, Apple continued to go higher from when I sold it. I think it's even back to where I just bought it now, or sold it now, but I'm just trying to just gauge the overall market. Right. And when I look at it, I just feel like you can't spend forever on these tops. Maybe it can, but this has now been going on. As I said, when I look at it on the S&P, this environment right here to me that we're in right now is tough. I mean, look at the weekly. I mean, I was looking at the weekly too, and I'm going, man, how many is it going to take out? I'm like, I've held through all this, right? And I saw this one get taken out here on the weekly, and I see the top. I'm going, they've taken out 2 on the weekly without even coming back to a yellow. It just doesn't happen often. I look back in the history. I've been trading the S&P for, over 22, 23 years. Eventually these yellows come back into play at some point.
At some point they will.
I mean, there's been so many reds taken out on the top without testing any yellows. Like, this is as strong as a trend as I've ever seen. So when I see that on my longer term stuff, I just start trimming it little by little. And I've actually just started as of late, because I'm looking at it going, if I buy it back higher and I'm wrong, I don't care. But at least if it starts to pull back from here a little bit, I'll start to pull, put myself back into some of these positions. But, to me, the overall theme of the market, it's tough here. It just is. I mean, I feel like it's, seeing a short setup in the S&P, even when I saw it on the daily the other day, I was looking at it and I'm like, okay, how much do I really want to do this? Yeah. How much do I want to commit to it? And if you're doing this every day as a day trader, you should do it. I'm speaking from my own time frame and the way I'm looking at things. I don't want to be super active in this right now. That's just my opinion.
Yeah. Great info. We love the setup. And Kevin just tested it, and so he's already on board, and we'll probably bring this up in sessions again. So again, thanks.
What time frame did you do it on? Did you look at it 1 minute maybe?
Kevin?
3 minute.
3 minute.
Yeah, on the 3 minute, it had curled up, and right at that point when it started curling up, I got in and ran out for 4 points. Just got out.
Nice. Yeah, I mean, I use them. I really like them a lot, the Bollinger Bands, because like I said, they just give me a visual representation of the environment. When we're going down or up with Bollinger Band mouths open, I do not fade those trends. I will scalp with that trend. And when I was really active, like where I was just doing a ton of stuff every day, a lot of what I looked at was, for example, let me see. I mean, this is only actually it's a 3 minute. Let me go to like a 5 minute. I would like stuff like this, where like we were to come down, hit the blue, and then grind up, and then just keep staying up. I would just be, little dips off the 10-day, buy them, cover them, boom, boom, boom. And just doing stuff like that, knowing that we just, once again, if I felt that the low was in, the market's going to look for a high. If I felt that the high was in, I felt that the market was going to look for our low. And I always say to anyone that scalps, you don't want to be a scalper against the grain. You want to be a scalper with the grain. So the more active I would get, I would be looking for these just ones that I felt were pinned up off of a spike low that was like, hey, we might keep going lower. Bollinger Bands are opening up. You see how it's opening up here on both sides? And then we just keep grinding up. Like I used to love that as a scalper, because I would just, they'd come down, get near my 10-day, or not a 10-day, but it's a 10 period moving average. And I just scoop some up, real tight stops, go a buck, buck and a half, $2 my way. If that, I cover them, and I would just always stay on the side of the grind, stay on the side of where I felt that the lower the high was more clear until the next new high or low was clear.
Well, that helps clarify that point of entry, because that was so, I mean, that to me has been my biggest drawback. I can't seem to stay consistent on a point of entry, or sometimes I feel like I got cheated. I didn't get there in time. And just looking at that said, okay, that calms you down, because I would have jumped in a lot earlier if I not seen that curl. I was thinking going long before that. I said, hey, typically I'd go long there. What would happen if I waited? And it worked.
Yeah,
Awesome.
I mean, I look at it and say to myself always is that I would much rather be in a market that is identified a low or a high, no matter what your time frame is, than one that is not identified yet. This is something that I've always liked as a trader, this is a big reason why I like opening range highs or opening range lows, and it'll hit my resistance or it'll hit my support, and I'll see it spike off of it. And I'll look at it and say, okay, now that low is in, we might grind up the rest of the day. I used to do really well in those times, versus the real volatile days where we make a new high and then we make a new low, and then a new low is made, and then maybe we make a new high. Those days, sure, you might do really well because you're getting so many different opportunities. But overall, I like the days where I feel like the low is, or these days, mostly I just look for the lows to be in where I really like it. And then I feel like the grind is setting in. And then every time it pulls back a little bit, you work the bid. And that's what I would do.
Anthony, I watched a couple of your videos, and there was one with your mentor and Pax, and you talked about trading with the second trade in mind. And I didn't quite understand what that meant.
So second trade first. Yeah, it's second trade first is the first thing we learned on the trading floor. Mickey Hoffman was one of our mentors. He's the one who taught me ARB, which was basically to bid and offer, in the market and in the pit, because that's where I originally learned. And what it is it's what we were taught in the pit, which is, it's very different from this, but it's the type of thinking is very similar. In the pit, what we would look for is, where is the easiest place to lean on where I know no matter what I can get out? Because in a market where we were all using our voice for providing liquidity, you had to recognize where the bids were, who was bidding, who was fake bidding, spoofing, we'll call it, right? They call it spoofing now, versus, you know, the areas where you could not. So what we looked at was, okay, if for example, and this is very similar to why I like to look for the lows versus the highs, when the market identifies a strong low or a strong high. However tool you use to determine that's up to you. But like I said, I use Bollinger Bands, and when they spike and they turn in, I feel like the lows are in or the highs. When I see that, I feel as though whoever tried to take it through that trend is now bid, and the people, so let's just say for a long example, right? Let's just use this chart right here in a 5-minute. This low broke the light blue, came back up, holds above it, and all of a sudden we're grinding higher above the 10-period moving average. In my mind, everyone who tried to press it from here is now turned bid, and all of the buyers that were buying in here, they're going to remain bid. So I look at that, and this is very similar in the pit, where all of a sudden they'd be like at 51.5, at 51 even, at 50, all of a sudden brokers would be like 9.5 bid. And when I would see that, we'd be like, okay, I could lean on the 9.5s, because at that point you're saying to yourself, okay, the biggest traders are bidding on the way down, and the biggest brokers are now. So the minute we have a pullback of a couple of points, everyone's got their hands up. So we would look at that and say, I could step in front of that. And if all of a sudden the 9.5s get hit, I will turn on and get out. So that means second trade first. I recognize the point of where I could bail, because I know there would be someone there, versus, you know, me trying to buy them up on a rally at 1/2 or 2/2. You're not seeing the bidders. They come down and they're bidding at 9.5. So all of a sudden I'm 70 bid, 80 bid, even bid. And we would bid above where the bigger buyers were. And if all of a sudden they go to 9.5, and all of a sudden a big local, broker would be like 9.5 on 100, and a broker would be like, or a local would be like sold. And I'd be like, oh my God, I'd be like 10 at 9.5, 10 at 30. And I would cover, because I would know at that point that it's breaking what my out was, my lean. Now in electronic trading, it's very similar to what I use for the low. That on this particular case, I would say this low is the point of pressure. The buyers are going to defend this low because the blue came in, the Bollinger Bands held. So my second trade right now would be, if it fails to hold 44.40, right? Roughly whatever this low is. I don't know what this exact low is. This exact low is 39.25. If it fails to hold 39.25, I'm out. So now I determine how much I'm going to buy here, or where I'm going to buy, based upon knowing where that second trade is. So 39.25, that's the place I know that this trade is wrong, right? In this particular instance, it's pretty accurate of what I would use. So I know that if this low fails, it opens it up to down here. Now, I know that we talked a lot more about this, how I'd be scaling in, but this is for an example's sake. If I was, as I said, if the trend was stronger on the daily and I bought in here, my second trade would be, my stop is below there. So I could buy as much as I want in this area, but as long as, and that would determine my position size, because once this area fails, I have to get out. So second trade first is knowing where your stop is and adjusting your position size based upon where you got in.
So it's as much of a thought process as anything.
Yeah. That's why I like the lows and highs to be in before I buy them. That's why I don't try to even buy highs and lows, because I don't have a lean. I don't have a second trade first, unless I have a bigger picture area that I'm just stepping in and buying. That's why I don't use the dailies as much, because it's like, I can't really manage my risk, even if I want to hold it for days, because it's too wide of a range. With the shorter term, I can at least utilize using the same indicator and determine that second trade first, my risk price. That's what determines my position size. I don't trade the same position size for every trade. It depends on how far away I am from my stop. I mean, I look at how much can I risk on a trade. If I'm going to risk $1,000 on a trade, right? Let's just say you want to buy them here. It's 10-point stop roughly right now from where we are. How much can you buy? Okay, well, 10 points, I mean, if you're trading micros or minis, it's going to tell you exactly how many contracts you could buy, which is essentially why I don't have a true price of entry. I really have more of my second trade first, and I try to buy closer to that price. This way I could get on a bigger position which essentially gives me the same amount of risk as if I were to buy them all right now, right here, I'd be in a fixed position size. If I start to scale in, as we start to come down, I could get my position size bigger, but my dollar amount of risk is the same.
Mm-hmm. That's the beauty of the micros.
Yeah, we do something similar to that, but not exactly, but using those same principles, right, Rob? I mean, we're constantly talking about, where do we want our stop, before we get in a trade, and is that too big a stop, and so forth, and how much risk are we willing to take? So very interesting. I like the way you said, I'm willing to, trade $1,000. Where do I have to get in? Knowing where my second trade is, where does that $1,000 kind of cap me out at?
Yeah, exactly. How many contracts can it be? I mean,
right.
I was talking about this the other day, and that show will be out tomorrow, where I talked with the guy who created all the micros. He's on my show tomorrow. I'm not doing a live stream. And I actually almost exclusively use the NASDAQ micros for my trading when I trade NASDAQ now, purely because I'm actually able to get on bigger positions. And people say, well, how's that possible? Well, because in the NASDAQ, I'm too price sensitive. The NASDAQ prices are on the bigger contract. I have to really pick it pretty close to good to be able to get on a decent sized position. And if all of a sudden it goes near a low or a high that I liked, it's off that lower high so fast that by the time I could get in, the positions are always smaller. With micros, I can scale. And my positions have actually been getting bigger in NASDAQ, total contracts wise, and getting up to my full amount of risk versus before with a bigger NASDAQ. I'm like, yeah, I might like this area right here, but am I going to step in and buy a handful? No, because I still got, it might have 20 more points or 30 more points for me to get in. So with the NASDAQ micros, I just been clicking in along the way, and all of a sudden I see them hold the low or something gives me a good sign that I like this position. Then I step in with more, and I was actually able to accumulate a larger position overall than if I were to use the NASDAQ.
Yeah, it actually, another dimension of risk management, letting you get in smaller bites, if you will.
Yeah, and you can be bigger that way, but people don't think about that. And people think that, oh, I'm going to be trading, once somebody has some success, so they want to trade bigger. It's like, I could trade a lot of NASDAQ, but that doesn't mean I'm going to. I still like the micros because there's a couple things. The one is I'm a clicker. So I like to click. So once I'm active into a position, micros help me kind of temper that anxiety, you want to call it, that wants to click. Yeah. So you're doing it without crushing yourself, especially when you're in your zone. I don't use them as much for the E-minis because you could still be a clicker and I can get in and out as I want, but I like them for silver. I like them for NASDAQ. It depends on the environment for crude. I haven't used a micro crude yet, but I like them potentially for that, especially for swing positions and scale outs. Now I like them a little bit for gold. I wish the gold was actually just a little bit bigger of a contract, but once again, it comes down to, what's your time frame? What are you looking at? What is your temperament? And so for me, I utilize them a lot. I even use them for the Russell, which I don't. The reason why I do for that is because in my longer term account, I've been trying to get long Russell. So I've been using futures instead of IWM and stuff. So I just click in and buy the Russell using futures.
The obvious question would be, well, what about commissions? Right? Because the commissions are a little bit more on the micros. So if you're clicking into more contracts, does that ever a factor for you?
So here's my thoughts on this. Okay. Do I think that the micros are pricier compared to the bigger contracts? 100%. The way that I'm utilizing the micros for my trading, the fees, well, let's be honest. There's two things. There's fees and commissions. Yeah. Most commissions are going to be relatively low. I don't know exactly what NinjaTrader's commissions are.
90 cents on the micros.
So it's 90. So how much is a commission?
MES. It's about 90 cents on the MES.
That's commission, or is that's fees?
No, that would be
total fees.
Yeah, 90 cents.
Okay. Yeah. So for example, so 90 cents. All right. I mean, if you're scalping micros, I don't care who you're using.
It's brutal.
The exchange fees are going to be too much.
Yeah.
Right. So in my world, I would look at it and say, if I'm scalping, I would not be using the micros for that. If you're going to be scalping in and out to try to make $25 using micros. Now, if you're trying to do it the way that I'm doing it, the commissions have absolutely no bearing on the way I'm trading or fees, because I'm looking at it as I'm trying to accumulate a bigger position for a wider target. I'm not really, I mean, if you're going to scalp, I think in general, I don't know, like one of the traders said that he made 4 points. I mean, that's feasible, I think, with the micros. I'm talking about if you're trying to make ticks.
A point, half. We
That's
try
a
to
tough
stay away
business
from
in
that.
general. I mean,
It is.
I'll tell you guys firsthand, I did this. I was a market maker, basically doing this for a lot of years. When the E-mini first started, I would be 200 to 500 up on the E-mini all day long. And that worked for a lot of years for me. And even my fees at the time, where I was making pretty decent money, I got myself into trouble, and I'm trading 100 to 500 lot E-minis. I looked at that business does not exist for me anymore. I mean, I feel that it's so difficult because first of all, the markets are much higher priced. So you have much more volatility on a lower percentage basis. Why try to make $2 when they're going to shake me out most of the time? When I started doing that, the S&P was trading 600. Okay. It's trading 4,600 now. So a 1% move is so much bigger. So when I look at that in perspective, the machines are going to move a lot more in a smaller percentage. And that's going to make it much more difficult for me to be really good with a price. The only way I was able to do that successfully was when the prices really mattered. So if I had support, I would step in with 50 or 100, and I'd see it hold, it'd go bid. I'd buy 200 more. They'd go 2 points or a point my way, and I would already be out of all of them, and I'd be scaling out 50-50 the whole way. That was that business. I don't think that business exists anymore. And when you look at that on a short-term basis for micros, for people that are trying to make a couple $100, $500 in a day, you have to look in perspective of if guys like me can't do it with 100 lot S&Ps, how can you do it with 5 lot micros? Yep. And it's because the volatility of the market and how much more machine activity we have because of the percentage moves is so much greater that you have to recognize that it's more about momentum and it's more about cleaner, longer moves than it is about short-term action. Yeah. Now, there will be environments for that where I think you can make really good money, because the scalp is a $2 to $5 scalp because you got a 50-point range in S&P every day. That's a little different. Right now, we don't have that. What's the average range in the S&P right now? I don't know. I can't. Maybe is it 20 points?
I think we had a 30-point opening range today.
So today was busy. Today was busier.
Yeah. Today was a little different.
But on the average,
it was 2-point opening range. It was a 32.5 point
for the 1 hour.
Smaller. Yeah.
So in this volatility, I would look at it and go, unless the average range is 50 points or more, I would not be looking to scalp. That's just my thing.
And the stress factor.
Oh, the stress factor.
I mean, holy crap, dude! The stress factor alone. Do you think that contributed to your health?
Oh, for sure.
Yeah, just constantly having.
You're just constantly engaged, and
you have to be on your A game all the time. And
I just feel that for me, I also have to recognize the change in the way the markets are. And if you want to make money, you have to be able to adapt to what the market is giving. Yeah. If the market is not handing out 2-point wins all day, every day, for sure, I know some people that are really good at it and they're doing it and they're trading order flow. And I'm not saying that it's not possible. I think anything is possible. I just think that in order to produce over the course of a career or multiple years of that, it becomes tougher and tougher, especially when you have the way the Fed is, the way the markets are. If we had two-way markets and news mattered more and the volatility was higher on a regular basis, I would say to you that yes, come in, scalp. You can look for that, and the cost of commissions wouldn't matter because the volatility within the market will provide you that opportunity. But there are months where their market does not provide that, and those traders get churned into butter, right? I mean, that's just what happens. And they look at their statements and say,
"What happened?"
The same thing, but all of a sudden, my commissions are 4,000 this month. My fees, I made, 5 to 10 grand, and it's 50% of this. I got to pay for charts. I might as well get a job. that's the case. You know, and then God forbid you have a couple of losing months in there,
Ugh,
and all of a
brutal.
sudden you're just like, all I do is pay the broker, and you call them and say I want a reduction. But it's not really even them. It's exchanges and brokers.
Yeah.
They got to make money too, and
Yeah,
I get
they
it.
do. Yep.
So you know,
Well, right on. Well, hey,
that's where I
before
stand with it.
yeah, that awesome. That's just, I mean, that you're telling us, you basically what you're giving us too is a lot of what we think about, but we don't have the experience to actually. So we appreciate this this knowledge that you're dropping on us, man. Before we get into crypto and Z.run, woo, woo, horses. Hey, Chris is going to jump on and talk about that. Does anybody else have questions for Deli? You know, for in futures or whatever. You guys all know.
I've got one, Rob.
Yeah, Randy, go for it.
Yes.
What's up, Randy?
Hey, how's it going, Crudele?
Good.
Edward. I've been following you for a while, you know, with this group and stuff like that. And
Cool.
always find it, everyone here will tell you I'm the one that is reaching out and looking for the next new shiny object and stuff like that. And some of them, you know, some of them stick, more of them don't. And that's okay. That's just the engineer in me. But one of the things, and we've kind of touched on it here, and I think this new thing, not new, but to you, but new to me, is these ranges with the Bollingers kind of fits with what I'm trying to think of as having a thing. Some of the interviews you've had, like with Scott Andrews and stuff like that, we always know that the market changes. You were just talking about it. And so there's signals, and I'm kind of looking for a signal that kind of moves with the market as opposed to something that's fixed. Like I see 2 candles this direction and one this, you know what I'm saying. So one of the things I'm wondering about, and you've talked about it with the pit traders and stuff like that. In fact, just today, is there some on the charts, you know, some look or something that tells you that a particular move, when you're looking for an entry, might be more stop covering versus trade entry? So, you know, when you're near a bottom, say, at some point there was probably some traders going short there, and at some point their stop covering kind of picks up the momentum of the market, because now they see that things are changing, they got to get out. Versus, and then when that stacks on with other people seeing the bottom and getting in, that's where your momentum seems to pick up and you start getting movement. So is there's something on the chart? You were talking about the hands up in the pit and stuff, give you a clue on that. But is there something on the charts that might fit those type of looks or sounds or criteria?
So this is exactly something that I would look at that would tell me that this is the longs are starting to bail, but this is a stop run. What I would look at right here, very similar to what we saw earlier in the chart today. This is still on a 5-minute. And remember how we saw, if you remember, we saw on the 5-minute, like I said, I just had this up, we had this move lower. And then what's happening right now on the 5-minute, which is not happening, did not happen here, was it hit this area and it was grinding up, right? Remember, we just saw that, right?
Right.
Okay, I'll go back to that in a second. That to me, remember I said, look for the lows that we liked. I talk about second trade first. Look at everyone's going lower here. A lot of people accumulating shorts, gets back above light blue, grinds back up. You got everyone that has been short, started to get a little bit nervous here, puked some, right? Now you got some guys that are trying to get long, right? And you got people that are probably stepping in here, holding above this low. And this is exactly what I look for, to where I start to say, okay, the momentum shifted big time. And where all of a sudden the stop run would start to happen. And that would be right there. So anytime we get below a low like this, where I see a new light blue, or let's just say it was a red, this is guys that were pressing shorts. They didn't quite, you know, this is not showing that they necessarily covered, but you definitely know that the longs are now leaning on this low. So everybody that stepped in here were shorts and longs, everyone along the way here. I know we got part of the overnight trade in here as well, but this is an area where I feel like even the longs that didn't covered down this on this move are looking at this low saying, we could be in trouble if this fails to hold. And what I look for is, remember when I said that I wouldn't step in and I said I would trade with the grain. Now, mind you, I'm not looking at the daily here. This is purely on this time frame. We start to take out this low and the bottom Bollinger Band starts to spike lower like this. And when I start to see action like this below a low, that to me is like you press them until this Bollinger Band starts to come back in like this. So the move that you're talking about is like that. It's taking out a prior low or high, unable to get to the yellow, right? Could barely get there. It might have kissed it, right? And came right off of it. But this is an area where the longs just feel that this area has kind of got a hold. It just kind of gives up. And this is a puke. This to me is a stop run. And it gets everyone out that wanted to be out based upon that low. And that Bollinger Band stays pinned down until it starts to come back in. And then you have it start to come back up. And then they start to come back in here.
Okay, so they start getting in with more confidence now that the low is in.
Correct. Once again, the low is determined, goes back up. Now, let's just go back a little bit further, okay, and look and see. You can see that this is a total test now. And I don't know how far back I went or anything, but so this low came in, and this is going to be another significant low because we held the light blue, we got yellow, and you say longs are accumulating in here big time. This actually was a double bottom there. So this would have triggered another stop run probably, but look at how different it looked here on the Bollinger Band versus how it looked here. So here the Bollinger Band was opening, okay?
Mm-hmm.
Here it pierced it, and at the time, if you looked at it, this was like, you're looking at this going, it's not really, let's see what the next bar does, the next bar, and boom.
Right.
So this is an important low right here. You know, here they pierced it. It was kind of a stop run, but actually we're in it right in here. But that's something that I would look at in the sense of where I feel that that's an area where my second trade first would be. That's where I would feel those people positioned that way, because I would be positioned that way, are now covering, because I'd be covering there. So I don't do straight reversals on that. But that's something that to look at. Sorry if I'm looking at my phone. I got an air conditioning guy come. I'm at my studio today.
Yeah.
No worries.
I'm getting duct work done here. I got to make sure the guy is not up front because I got my door locked. Okay. He didn't call me.
Awesome.
Okay.
Right on. That help, Randy?
Yeah, that helps a lot.
Awesome.
Look at the Bollinger Bands, Randy. When they're opening up and they're taking on a prior low or high, this is the simplest way I could think about it. And the Bollinger Bands are opening up. It's expanding volatility. Watch to see if that Bollinger Band is taking out previous highs or lows as well, because it's expanding volatility with not only with price, but with an indicator.
Yeah. Yeah. It's showing you over the more than just one or two candles, what's going on.
Yep.
Cool. All right. I know we only got about 15, 20 minutes left. So let's jump into, hey, Chris, you there, bud?
Yeah, I'm here.
Awesome.
Taking it all in. That was awesome.
I know. Wasn't that? I mean,
oh my gosh. Hey, could you just show us how you get set up real quick? And then
right.
One hour later.
Yeah, that was
awesome though.
Pretty phenomenal. So thank you.
You know,
so much
well, the thing is, we dabble
Yeah.
with Fibonacci pivot points and Bollinger Bands, and just to know that the group has their band set at 2 sigma and 4 sigma, and we're like, okay, that's a lot of work when we could talk about a 3 sigma. That's right in the middle and how it behaves. But just the whole thing. I appreciate you as always, Anthony. If you guys look back through his Futures radio show and all the information he has available, he goes over this stuff.
He goes over it. Yep.
A year and a half ago, we watched a Bollinger Band video. It was the first one I had ever seen. And because there's lots of information available on the internet, but Anthony, dude, you do a great job of, I mean, I know we're all traders already. If we were new, we might be like, what? But since we're traders, I mean, there's a lot of blanks that got filled in. This was like Mad Libs today, just filling in the blanks for a lot of smart people already. So thank you.
You got it. Well, thank you for having me.
Hey, anytime, always. And Rob's always changing the link. He'll make sure you have the new links if you want to pop in and show us stuff.
Well, you also too, you've got a membership here, so you've got carte blanche, and at some point
that's how we avoid royalties.
Yeah.
So But speaking of royalties, man, this is a great opportunity to just not have to do all the talking on a subject that I was introduced to by you. So Zed Run, we'll skip the crypto talk right now and go straight for the horses. But I'm just going to let you tell some of these people, it's 30 something people in here, not all of them besides hearing like, you guys should see what's going on with the horses. They haven't really heard, how does this relate to us as traders and all that jazz? So I just wanted to see if you wanted to introduce Zed Run to these people that really don't know why we're involved so quickly and already, I guess, in something like that.
Yeah. So Zed.Run is an NFT. And it's the only NFT that I know of that you could actually race against other people with NFTs, gaming. You also can generate income from breeding. It's a virtual horse racing world. And I've been building a stable for about 4 months now. I haven't publicly announced my stable yet because I'm still in the process of branding it and marketing and getting it all ready for not necessarily marketing, but just getting my stable intact. Mm-hmm. And what I've been doing is I've been buying horses, breeding them, creating new NFTs, which are horses, and racing them, doing all sorts of different stuff to generate income and to grow a stable. Now, why would someone like me do this, and why is this of any interest, I think, to the trading community? Because number one is I think that a lot of these JPEGs, I think over time I don't know what they'll end up being worth. It's just very difficult to say, but I know that, from the, what is it, the apes and all the different ones that are out there. Yeah, I don't know any of those. Yeah, bored apes. I mean, they're just, they're interesting to me in the sense that the world of crypto is embracing that. To basically have an avatar for that, I guess. I don't know. I don't see the value in that necessarily. I do understand it. I do understand why they're doing it. And people got to remember too, there's so much money in crypto. There's so many people that have so much ETH and Bitcoin that you can't wrap your head around that are buying stuff like this because they're keeping it in the crypto ecosystem. So there is that. So when I look at these whales buying some of these things and saying, this is what I'm buying and this and that, I get it because to them, you don't know how many ETH they have, and it's probably a lot more than you think. So some of these people just are looking for something to do with it in a sense. So I think that's definitely a part of the hype. And remember, what whales do is whales find something that they like and that they bought, and then they start pumping it. That's what they do. I mean, you could see it with a lot of these different cryptos. It's just one of those things. And, it's just no different than a big trader buying the S&P at a really low price and then coming out when it's 500 points higher and saying we're bullish now. Yeah. It's very similar in thinking.
But this Anthony, you mentioned that the NFT thing, that's confusing to a lot of people that aren't familiar with the new Web 3.0, the way they're doing stuff, the avatars, the lack of use case for a lot of the collectibles and art pieces that we're seeing. And that was the thing that we had questioned. Like, I want to see something that has some practicality or use case. I'm not sold on an Axie Infinity being something I want to spend my time doing. And the horse racing having a use case as an NFT, putting your asset to work for you possibly, and being the only one that has that asset, having a unique
that's the difference
asset that only you can use, promote, sell again. Interesting.
So that's why I got hooked on it.
I'm curious, is that based on real horse racing, like at the track?
No.
Okay, so because the gaming side of this with the NFT, I mean, I get that, the kids are big on buying that for the game, so they're spending it. Now there's kids who've been in crypto who spend a lot on those NFTs for the gaming side. And my son's telling me he's got buddies at $20,000 NFTs.
Oh yeah,
and I think the real important part that Anthony, this is an 18 and over type gaming situation, not because it's gambling, because of the investment world being kind of attached to the crypto space. And this doesn't come through your Xbox or your PlayStation. This is something that, it's gaming, but it's not. You're entering a game. Yeah. You're not doing anything. You're not spamming the keyboard trying to go faster. You're not betting on horses. So you're entering for an entry price. And then the top 3 racers in each race are going to make a part of the prize pool back.
Exactly.
And it's part of the game giving back rewards for participants is what it is. So
Exactly.
it's no different than entering a motocross race. The winner is going to get a nice trophy and a check. A dance competition, a golf tournament. It's all, you're only betting on yourself when you enter.
Exactly. So I pulled up, it's called knowyourhorses.com. This is the site that you go to for statistics. So let's stay on this for a second. And I am by no stretch an expert in this, but it's something I spend a lot of time on pretty much every day of my life at this point. And there is Nakamoto. So here's the bloodlines: Nakamoto's, Szabos, Finneys, Buterins. The breed types are Genesis, Legendary, Exclusive, Elite, Cross, Pacer. Of course, it's Stallion, Colt, Mare, Filly. And the genotype, it can go up to 268. So that's if you breed with a Z. So Z1 is the original generation. So that's the minted ones, the original horses. There's only, I believe, Nakamoto, Genesis. I think there's only 1,000 Z1s is the top bloodline. Then if a Z1 breeds with like another Z1, it creates a Z2. And then if it's a Z2 with one of these, it creates different bloodlines. And each one of the horses has different characteristics and traits. So the goal is to breed your horses to race and to compete. And what I have done is I have bought some of the top horses to be able to breed to sell. If you go to the breeding, you can go and see, like the stud farm and stuff.
So if you ever need any stud servicing, just holler at us. we
So
do some
that's
trading.
the beauty of this. There is no
Stoney's your
servicing.
man. Stoney's your man. He's actually a cattle guy. He raises champion bulls for the PBR.
No way.
In Texas.
So-
yeah. He's a PBR. He's an ex-PBR
So
bull
I
rider
think-
and trader now.
So this is a virtual world of where they only minted so many horses. The only way more horses can come into it is by breeding them. That's it. So if you own some horses, males and females, you could breed them. You have to pay the fee that whatever it is that you put your horse out to breed at. Zed takes some money from it, and then you create a horse. You could sell it, you could race it, and what you do is you come here and it'll start showing you stats. So like this horse, Sun Will Shine. So let's just go to like a Nakamoto Genesis Z1, and let's just see what the stud fee is. So, okay, so this is a Z1, so 0.3 ETH. Now, if you want with this horse, you can click on this horse, and it tells you their win rate, where they've placed in these events, all sorts of things about the horse, the speed wise. And then you could take the horse that maybe you bought as an NFT, and then you could breed with this horse, and then you create another horse. And it's just this ongoing type of thing that's so what I've looked at it as. My thought process was buy some of the top horses that no one can get, that can't breed anymore of, breed some, create my own stable for racing and for breeding. And when I first started looking at this, there was about 12 to 15,000 people on their, what do you call it? It's
Ecosystem.
Not Telegram. I don't know how many
Discord.
people
On Discord.
That's what it
Discord,
is.
yeah,
I couldn't think of what it
Discord.
was.
Yeah.
Now there's 80,000.
I'm on their Discord. It goes
Yeah, so am I.
nuts.
It's
Yeah,
crazy.
it goes nuts.
So when
Yeah.
you look at it, it's like I look at the fact that the numbers over time, I believe, of people that are going to want to race and compete and to breed is going to go up. So if you bet it's going to go up, then you can position yourself and how you're going to do it. So I've just created a stable, and like I said, it's going to be it's going to be just for breeding, part is going to be for racing, and and that's just what I'm doing, because when I look at the crypto world, this reminds me when I first saw this, the name of that movie where they're all in, like where the guy goes to the video game and he gets sucked into the video game.
Tron.
Ready Player One? Oh,
Tron.
Player one, too.
Yeah,
Very
man.
similar. Very similar. And if you go to Zed.run, you will see how it is. It's very cool. And I look at it like this. I said, and the reason why I even mentioned why the whales that have the buying the NFTs, because they're keeping stuff in crypto. Everything you do here has got to be in ETH. Then you got to wrap the ETH. You got to move it to the Matic network. So everything is kept in crypto. even the money that I've made in prizes, some of the horses I've sold, I've just kept it in crypto. It's its own crypto world. And in the world that we live in now, it's just going to continue to grow this way. And you haven't heard the Gary V's of the world talk about this yet. And I look at this and say, to me, if there's any NFTs that I'll buy, it'll be in the gaming side of things. They're partnered with NASCAR now. They're partnered with Atari. They're partnered with Stella Artois. There is going to be a virtual Kentucky Derby.
The Preakness.
No doubt about it. In my mind, this will happen.
Yeah.
I think especially in the world of COVID, this is something that was also very interesting to me to say, hey, I could breed horses, and it reminds me kind of a fantasy football, all sorts of different things. So that's why I'm in it.
They said that they're already mixing this with mixed reality, augmented reality, to where VR people can watch the horse races, be present at the horse races. That's coming. It's in the future of the game, so to speak. The game is that there's going to be a version of it for spectators, and there's also a part of the betting that might come to it. I don't know how they would keep the breeders out of the betting, but
they'll probably have to, it'd be very similar to what they do with regular horse racing. I don't know much about what their plan is to do all that stuff, but I look at it as this: it's like, is that world going to shrink? Is that world going to grow?
Expand, right?
I mean,
it's gonna blow.
There's 60,000 more people from when I started. That's not nothing.
Did you attend have you been to the Decentraland Zed headquarters?
No.
Okay, so we went after they had this opening.
Could you pull
day.
up your screen? Could you show me what that even looks like?
Yeah, absolutely.
What is that? I don't even know what that is.
Hey, before I do, while I'm pulling it up, will you show them the blog post there? Because there's something about risk and probability there that really connects to, if you drop the blog post down, these articles, how to think like a professional risk taker, how to race like a professional risk taker, ties the two together from kind of what the things that we talk about to how that integrates into the horses. So
I know Ryan personally. He's the guy who created the site, and Ryan was a trader at SMB Capital. And he left SMB. He was a prop trader, a successful one, and he left to go to do this. I know several traders that are in this now. And so this is a story, Ryan, I didn't read this article by him, and if I did, it was sold May 15th. Oh, I might have read it. Vanilla Bean, that's his horse. I know that. That's one of the more popular horses in the ecosystem. Everyone knows Vanilla
Chris
Bean.
is sharing his screen. Deli, if you want to
How do I get back to that?
Well, if you go up to view options, or we can just, there you go.
All right.
So I'm signing in through the MetaMask to get into Decentraland. Another thing, MetaMask, like Anthony's talking about the Ethereum and wrapped ETH and buying things on the Polygon chain. And one of the things that you have to have is a MetaMask. Now you can do it with email, they say, but the MetaMask is something that protects you while you're online.
Oh, I didn't even know you could do it with email. I've only used MetaMask.
I only read that you can do it with email. We don't even go that way. I want to use the MetaMask. So, and MetaMask is an ETH wallet that works through any browser. We have it through our Brave browsers.
Where are you going to get to this too, by the way?
Okay, so now this is Decentraland, Mana. Everybody's heard of. I think everyone.
I've heard of that.
Crypto space is a little familiar.
So where is the Zed? So the Zed is in here?
Yeah, Zed lives in Decentraland now. Their headquarters does. Let's see if I can find it here. There's another way to do this, I think.
So I look at it like this. It's always like, I've invested in several businesses over the years. A lot of losers, some winners, and I look at it and I say, this is, to me, I look at this, and this is what's cool about crypto, is that you're able to invest in an ecosystem that is, I really do believe that is only going to grow. You're able to be your own business owner in the stables, and I just find it to be very interesting. I have no idea what it'll turn into, but I look at it and say, for me, my goal is just to grow it over the next 3 to 5 years. Like, I'm not in any hurry to sell anything I have.
Yeah, that's where we're in the kind of the same. But how many horses do you have in your stable, Billy?
Right now, I have 6.
Okay.
He's got a couple of Z1s in there, is what he's telling you.
I think we have, what do we have, Chris? 12 or 13?
You guys have that many already?
19 horses, and
we have 19.
We're breeding 8 in a week. Eight babies, so we're breeding 16, I should say.
That's what I said. We need to do some demon trading.
All right, hold on. Let me figure out what's going on with the volume here. There's a DJ. Why that's happening. Oh, it's good. Take my sound off?
I can't believe I have not seen this.
Hold
Now, what
on,
is
give
in
me a
here
sec.
that's different?
I gotta
what
turn
is in
that
here?
down.
Mhm.
Where's the volume here? I've only
We
been
can't-
here a couple times. There we go.
There you go. We can't hear your volume now. So
You guys
Yeah, you
can't
took
hear
it
it, but
down.
I can't hear
No.
anything right now.
gotcha.
Let me turn it off. All right.
Yeah.
So this is Zed Run's headquarters. Let me back up so we can get a look at it here. So this is inside of Decentraland. It's a new virtual reality place. My brother, I had him go. He has an Oculus Quest, and I said, "Can you go look at Decentraland on your Oculus?" He goes, "Okay." And I had him go check this out. He's like, "You got to get an Oculus. This is amazing." So I've been actually to Vegas casinos in here. They're actually just down the street over here. So Vegas casinos are over there under the umbrellas. And Zed headquarters is out here in this property. If you look on an aerial map, they're out here with the Atari casinos. And this is just
Is
a
this
virtual
nuts?
land.
This is great.
People have been selling this virtual land for months. You're looking at a parcel that's a certain size, right? It's a little square, a little cube on the game space, the metaverse. And it will cost you right about $6,000 to build or to own one of those parcels. Then you build on it. You're looking at about, I don't know how many parcels this is. Looks like 12, 15, 16, 20 parcels, but let's go inside and take a look. So we're inside of the headquarters. This just opened. And if you look over here right away, they showcase some amazing winners in the game, like Breathless Edge. And you can interact with Breathless and get some information.
Now it's funny. I've seen this on a YouTube video, but I've never been in it myself.
Mm-hmm.
And then
This
it shows
is
their
so cool.
stats down here.
I
And
was
then came
wondering
here
where
and
this person was showing that.
There's a
Now
store.
I get it.
And you can buy t-shirts here.
Mhm.
And then what's this? There's little kiosks everywhere where you do stuff. There's the t-shirt kiosk. They're currently sold out, so you can't get one. Let's try. Yeah, you're about to get an item for free, and then you do it. You go through the MetaMask. It's kind of like, okay, let's try that. Transactions being processed. And it's going to tell me they're out probably. Thanks, but there's no more. So I went ahead
This
and
is
went through that
crazy.
for your fun. And you get going again. I'm not very good at navigating this. We can get some information on one of these horses. This is Billions.
Yeah, I've seen Billions.
20. Yeah, Billions is cool. He's a Z1, one of those horses that Anthony's talking about. A Z1 Nakamoto Genesis stallion. Means he's mated. His color's Fortune. That's a pretty cool lucky color for him. And it shows you his stable owner right now is Kawaku. And he's got a 16.87.
That's a high win rate.
And if you look at win rates from a stance of the fact that he might be, since he's a fast horse, entering expensive races, that could be very profitable for him. And you can view that information online in a few places.
And also, the other thing is too, so the difference between a Z1, Z2, Z3s, when you look at those, even Z4s, they're not U horses when you look at statistics. So when U horses are
Right.
like, they come in first a lot and they come in last a lot. That's why they can't get into class 1 or class 2 races. So that's the beauty.
They're good breeding horses.
They're good breeding horses.
They make race horses. We have a horse right now that's a U horse that just will kick everyone's butt in the 1200, or you don't know what's happened to him.
Exactly. That's exactly what the
And
U
he's an
horses, I know.
exclusive, I believe. Because
Yeah, I
he's
mean,
mixed with
like
some
I
good stuff.
have some pretty good horses, and like I've lost to Buterins, which is a
Upstairs.
low bloodline, and they've beat me and they just blew me away. And
Depends on the distance, right?
Yeah, the longer
figured it out.
distance, the better the better the breed, the better they do.
I got a friend Travis that might be here.
This is
He's
crazy.
been helping. Yeah, he's here. Travis and I have been meeting about speed analysis and speed statistics and reading those line charts. And we've been doing a lot better since then, placing our horses a lot higher.
Yeah, that's what I mean. You got to get to 50 races at least.
Where's it at? There's something.
And
up
I
here.
tell people, if you get a horse, do the free ones or the $2 races until you really know your horses. I mean, I think, a lot of these horses, you got to get to about 100 races to even know how they are.
This is interesting. This is an NFT that shows that when they were doing the draft board on this, they didn't know what they were going to do for jockeys. So they drafted jockeys, they drafted drones that would match the color of your horse and kind of highlight your horse. That would be the pilot. So they were trying different things. Here's the picture you see on our website that we've stole. But different NFTs here. This is pretty cool. They had a DJ playing back here with real music, and there were 5,000 attendees on the first night.
And that-
5,000.
Think about that. I mean, this is what I'm saying. I mean, it goes back to what or why would you do this? And I've told so many of my friends that some of them look at me like I'm crazy. I'm like, listen. And my whole game plan with this was,
I just jumped
make
off the
some
roof.
money in ETH, take that ETH profit, buy some of these NFTs. And I've been doing this for months now. But yeah.
So this is Decentraland. All this land out here that looks like this is probably either it's unincorporated, like it's owned, but no one's built on it yet. So it looks like just gardens and stuff. But when people build in Decentraland, you get a little bit of everything. You kind of take off and go to the map, and you can look around here and see that there's a whole section of this place. There's Decentraland University.
Where's the bass pond?
Yeah,
that's what I want to know.
That's more on
right?
Solnium. That's a game that's going to have more space. Look over here. There's like Chinatown over here. Not somewhere that I'm looking to build anytime soon is Chinatown, but there's the Gamer Plaza. So this is a view. I can't get bigger on this view. I don't know why, but there's a little bit of everything. Like I said, we're out here in the middle of this for Zed Run by the Atari Casino and Vegas, Little Las Vegas, I think they call it. And you click on these big ones that don't have a lot of little squares in them, and you're looking at someone's estate in the making. So someone building something large in the metaverse. So it's a whole different world. I swore I would never get involved in, but
I said the same thing.
But with the NFTs doing something and not having time for video games, I don't have time for that. And looking at charts all the time, adding a little bit of euphoria, a little bit of endorphins, a little bit of fun, because it's pretty exciting when your horses place, especially when they win or get last. Exactly. I get excited when they get last too now, but not when they get fourth. I don't get excited when they get fourth. And there's a reason for all that. That has to do with
you get points and your classes.
Racing your horses out of class, and then your hose. There's the Vegas Plaza. Let's just jump in this Vegas Plaza. So you jump into these places. If I had VR on right now, I'd be out there. I could see my hands. Looks like we got a little problem with the code.
Well, anyway, boys, I got to hop. I got some guys. I'm getting some work done in my studio in the background here. So,
hey, Deli, thanks a lot, brother.
Thank you, guys. Appreciate all of you guys for having me. As always, it's always a blast. Yeah. Thank you for the questions. And everyone knows where to reach me. You can hit me up on Twitter anytime.
Awesome, man.
Thank you.
All right, guys.
Much.
Thanks, dude.
We will be having our horses reach out to your horses.
Yeah.
Hey, I'm getting ready to put together a Twitter channel for it and everything. So
we'll be part of it.
I'm working on it. I'm working on it. All right. I'll talk to you guys later. I'll see you.
All right, Deli. Take care, man.
Bye-bye. Bye-bye.